Hey traders, I just want to bring your attention to CAD Swiss on the daily time frame. We have a very interesting setup here based on yesterday's close as a bullish pin bar reversal at our old friendly level of 7729. As you can see here, this is a level which has been tested once, twice, for the third time since it broke out convincingly in earlier September this year. As you can see, if we take a further look back, that this level is a well-respected horizontal level of resistance, which has now turned to support here. And we can see that the Canadian dollar versus the Swiss franc has not done very much since the breakout. And we have this rectangular formation forming, and this is punctuated. The move to the bottom, the most recent move to the bottom, has been punctuated by the close of the bullish pin bar reversal here, as we can see, closing on Wednesday, the 15th of November. Now, you might be thinking, so what? And you could be forgiven for thinking this way. It's after all, it's only a bullish pin bar reversal at the bottom of a rectangular formation. Well, it's a little bit more than just that. It's actually a very efficient entry point if we did want to buy this Canadian dollar against the Swiss franc. The fact is at some point this rectangular formation is going to blow out either through the level of resistance at the top here or through the level of support here. The fact is we've still got the moving averages sloping upwards, and we've got order, angle and separation here, so still fundamentally in a buyer's market, even though the shorter term we are range bound. For those of you who look at Wyckoff, we're in a state of accumulation distribution, but that's besides the point. We're trading what we see here, not what we think. So for those people who trade range-bound markets, this would be a very good logical play in simply buying at the bottom of the range. And we can trade this, trading the advance pin bar entry by simply having our order at the midpoint of this bullish pin bar reversal, because you can see that yesterday, or Wednesday, should I say, was a false breakout to the downside. So we can say here that as the previous occasion when it had a false breakout below this level, which is a well-respected level of resistance, now testing a support, by the way, we can say that if we have our stop loss below this bullish pin bar reversal here, around about 77.04, we can say that if price does take out our stop loss, then the bars which initially caused it to low test today are proven to be no longer there. And that would be quite a significant event if the bears did take control and take out the low of this bullish pin bar reversal, given that, as I just mentioned, this long-term horizontal level, which has been testing as support ever since this level of resistance, which has been formed ever since 2015 here, is broken. So we always recommend in this instance, the advanced entry at the midpoint here, because what the midpoint entry can do is give us a very efficient entry compared to if we're just simply entering at the high of this bullish pin bar reversal here. Instead of like 62 pips difference between our entry and our stop loss, as we would if we just entered at the break of the high of our stop loss below the low, at the midpoint here, we can, with our stop loss below the low, achieve like a 31 to 34 pips stop, which is essentially half, which means that if we are triggered into the order and price does take out the high of the bullish pin bar reversal, which would be our standard conventional entry, then we've already made 2%. We're risking 2% in this trade, or 1%, and we're risking 1% in this trade. So for every, say, equivalent distance the market thereafter goes, after triggering us into this trade, of the size of this bullish pin bar reversal, then we've made 4%. So if we go up, say, for example, this bullish pin bar reversal is, say, 62 pips from high to low, and we've entered at the midpoint, we've already made 2% by the time the high is taken out, and an additional 4% if we get the equivalent distance in our favor after the high is taken out. So it's a very efficient entry, and we've calculated that if we're risking, say, 31 pips on this trade with our entry at the midpoint, stop loss below the low, then if we are targeting, take profit 2 will be at the top of what we make out to be this rectangular formation here of 137 pips. So if we divide 137 pips potential reward by 31, then that's a pretty decent reward to earn. That's over a 4 to 1. So if we're risking 2%, that will be 8% potential profit on your trading account if it goes the right way. Okay, so that is CAD Swiss.